Okay, Miss Debbie, I think we're live, but let me verify over here on Facebook real
I
quick.
say live.
Let's see. Yep, we are live. How are you doing today, Miss Debbie?
I'm doing well, thanks. I'm at the gym,
You're
so the
you're
podcast is done.
you're getting your cardio in.
I'm getting my cardio in. That's what we need to do
What
nowadays, especially after you turn 50.
word on the street? Your husband says you love doing cardio. It's like your favorite thing in the world to do.
Oh, yes, my favorite thing, definitely.
That's hilarious. Okay, so today we want to talk about real estate, Miss Debbie, and you have a lot of experience in this industry because you've been around this industry for how many years? How many years have you been in the real estate industry?
32 years.
32 years. So you've gone through some pretty big events. You went through the 2008 um, housing market crisis, and you've seen a lot happen. And so I think a lot of people today they're very very confused as far as real estate. Some people are like, well, is this a good time to buy a house? Is this a good time to sell a house? Should I refinance my house? I don't really know what's going on. So can you kind of tell us a little bit as far as what you see happening? And I mean, just kind of give us your insight. What's happening in the housing market right now?
So this year, as everyone knows, well, actually, it started since the pandemic. The housing market just kind of exploded. So inventory was very limited, so prices were up as part of it. So consumers were basically paying above list price. There is no rhyme or reason of how much above list price. It was just depending on how much a buyer's willing to, pay above that list price.
And so that's like basic economics. So that's supply
Right.
and demand, which means that when there's limited inventory, which means there's not a lot of homes available, then and there's a lot of people that want to buy homes, so limited supply, high demand, then prices are gonna go up, and so inflation has made prices of homes go up, but then also the buyers have made the prices of homes go up. So if somebody lists a home for, let's say, 150,000, but there's 20 buyers and there isn't a lot of homes available, they'll bump that up to 180 or 190.
Yep, that's it. Basically, what we've been seeing.
But the home is not necessarily worth 180 or 190. It's still
Right.
worth the 150.
Right. And
So
to
let me ask.
it just kind of depends. So what's been happening, and a lot of people have asked, well, how are they appraising? When I spoke to an appraiser, it's exactly what you said, supply and demand. So they said, um, basically, if we had 20 homes at 150, they would all get sold. So that's how they're justifying the price.
So the bank will factor in the economics of supply and demand to justify loaning out more money than what the house is worth.
Correct.
Well, at
We've
the end of the day, banks are
we've
businesses. So
yes, we have had several that have gone above list price and has still appraised.
got it. Have you gotten any that were denied? That
Oh yeah,
the bank did not approve the loan, basing it on the offer.
yes, we have, and a lot of times because it's not just the price that's get factored in, it's also the condition of the home. So if the condition of the home was not where the bank wants it to be, then of course it's not going to appraise if it needs too much work.
And so okay, so that's kind of what happened, and that's why the price of homes has gone up astronomically. So let's say, for example, if somebody's contemplating buying a home right now, because I think right now there seems to be a little bit of a step back. It doesn't seem like there's as many buyers right now as there was maybe 4 or 5 months ago. Can you hear
I'm
me?
sorry, repeat that. I was moving.
No, no worries. I was saying that for somebody that's, let's say, contemplating selling their home right now, there seems to be a little bit of a step back. It doesn't seem like there's as many buyers right now as there was maybe 4 or 5 months ago. Is that the case?
So we've had the buyers pretty much slow down a little bit. I've seen a little bit of a slowdown now. Um, the houses, you've seen the houses kind of stay on the market a little bit longer than typical. And by longer, I mean maybe a week versus 24
A
hours,
day?
days,
Sure.
a day.
Okay. Got it. Got it. And so what advice would you give somebody that is wanting to sell a house right now? I mean, if they're contemplating selling their home because maybe they want to go into a different home or a bigger home or whatever, is it a good time to do that right now, or is it not a good time to do that right now?
Well, it all depends. So if they want to sell the house because they're moving away somewhere else to be with family or what have you, then it's a great time to sell. But
Right.
if they're trying to sell because they want to move up or get a newer home, then it's not a good time to sell for them, only because they're going to be in the same situation as the current buyers. Does that
Got
make
it. We're
sense?
right. So let's say, for example, they paid $120,000 for their home, and let's say right now, basing it on current market conditions, they could sell it for 160,000. So for them, it's great. They're like, oh, I can get $40,000 above what I paid for my house originally. But then you want to go and buy a $160,000 home, and that home is not 160. Now it's like 225. So like you're really not gaining anything.
Right. And the issue is, are you going to be able to find it?
Got it.
Because
So
what's
so
going to happen is they may not be able to find it, and if they do find it, they may be fighting against several other buyers to get that property.
Understood. What's the sweet spot right now? So I would imagine, especially here in the Rio Grande Valley, there's homes that are at a certain price point where they don't move as quickly, and then there's homes within a certain price point that they move very, very quickly. What's that price point where homes just go super fast?
Oh, that'll be in the 120s, 150s price range is where you're going to be getting all those, where you have a lot of the buyers.
Which today, whereas in maybe 10 years ago, 120 to $150,000 bought you a pretty nice home in the Rio Grande Valley. Today, 120 to 150 isn't really buying you a whole lot of house anymore.
Correct.
Got it.
It's getting, yeah, it's a little tough to find those houses in that price range.
Okay, so seeing as how you've been in the real estate industry for such a long time, do you see this getting better? Do you think that this is going to stabilize at some point? And if so, how long do you think this is going to take to somewhat go back to a sense of regularity?
I think it is going to start leveling off. I don't know how soon it'll level off, but we are definitely seeing, like I said, a little bit of a slowdown now. I've shown several houses recently that have been on the market for about a week, maybe 2 weeks, and they're nice houses. Um, but there was a time when a seller could price their home a little bit higher. Now those prices, they're having to come down to more of the market. I have seen quite a few that have asked for price reductions from not just
Got it.
our company, but also other realtors.
Got it. Got it. Okay. Now, for people that want to refinance,
Uh-huh.
but they're wanting to stay in the home that they currently own, I'm guessing in that scenario, because interest rates are so low, I think right now banks are still giving 3%. If you refinance, if they want to refinance and pull that equity out of their home, this would be a good time to do that.
Correct. As a matter of fact, right now I was just talking to one of the really good lenders, Laura Vieta with American Home Lending,
Woo! Yeah, she's
and
with
she,
us. Yay!
yes, and she said that when you refi to do a cash out, the interest rate's going to be a little bit higher. She just quoted one of my customers a 4 point, I think it was a 4.375
Hmm.
with 2 points, I think, basically buying down the rate. But it's doable, and I think the credit score was 628.
The client's credit score was about 628.
Right. I'm
Got it.
sorry if you can hear my music in the background. I can't figure out how to turn it off.
No worry. You're good. You're good. Okay. Well, that's still not too bad. I don't think a lot of people are aware that what was it, maybe like 20 years ago, interest rates for homes were like at what, 15, 16%?
When I started in '89, they were at 19%.
Holy smokes. In
So when I
89.
started seeing the 5% and people were complaining about, their fives and six, I'm like, well, I came from when I started, it was a 19%. So to me, it's still a great interest rate.
Yeah, that it's funny because I tell clients that all the time when we're talking finances, they tell me, I want to pay off my home. I want to pay off my home. And I'm like, well, what's your interest rate? And they're like, well, my interest rate is 3.5%. I was like, you do realize that inflation right now is 5%, which means that you're at least basing it on inflation, your home is appreciating at a bigger rate than what the bank is charging you to borrow that money. Oh, let me add this dude over here. Oh man, it's a party now.
That stranger.
Hey Deb, hey Ro, how you guys doing?
Doing
Oh
good, man. Were you able to pick up all your stuff?
yeah, yeah.
Good deal, man. Good deal. So we're me and Debs we're just talking about the real estate market and what's been happening here for the last year and a half, and how homes have just been ridiculously going up in value, just because of economics and the fact that there isn't a lot of homes available. So what's your take on that, man? Your take on the real estate market over the course of the last year?
Well, there's a lot of overpriced properties today because there was a lot of demand. I think there's just a lot of people who were looking for homes that it was the right time to buy a home for a lot of people in 2021 and 2020. More and more people thinking about staying home than ever, and it was all about buying a house. And because of all that demand, the prices went up, and now we have I won't call it high price market. We'll just call it it's what it is. It's just the market. It's just what it is. Nothing we can do about it now.
And what's your take on when this is gonna? And there's a little bit of an echo. Is that you, David,
I don't think so.
or Miss Debbie?
That's me. Hold on.
Okay,
There you go.
Finally, I figured it.
awesome, very good. Thank you, Miss Debbie. So when do you think this is going to stabilize, if ever? Are we ever going to go back to like normal prices, or what is considered normal, or are homes just going to stay
Nah,
expensive forever?
it's not expensive. It's just what the market is. If the price of the dollar, inflation's gone up, right? So it is what it is. I think that as long as interest rates stay for the next 6 months, we won't see anything change. But when interest rates change in the next 6 months, it's going to definitely affect realtors. Anybody who's out in the actual, like the real market, it's going to affect them because now people are going to be able to buy or aren't going to be able to buy as much home. So, which will cause not a demand shortage, which will cause the price of the properties. Let's say if there's a range of, let's say between 10 and 20,000 on most homes, let's just say that it's going to go more towards the lower range than it will be the higher range. But comps are always going to come in. Debbie can tell you that. Now that the comps have been in for a year and a half, they can't argue. You can't argue the price. You can't.
Right.
You can't.
So here's my argument to that, or not necessarily an argument, but here's my thought on that. Okay, so let's say inflation continues to go up as drastically as it's been going up for like the last year, and it gets to a point where most middle America cannot afford to buy a home because things are just way too expensive at this point. So they just can't afford to buy a home. And so now there's an influx of available homes because maybe some people just want to get out of their home, or they want to sell or whatever. Now there's too much inventory and not enough buyers. Then, regardless of whatever inflation is doing, won't that necessarily push the prices of homes back down a little bit?
It'll bring them down. And prior to COVID and all this craziness, our average days on the market were 180 days. That's what we were looking at. So if we could go back to that, prices will come down some. Sellers will have to be more realistic as the property starts staying on the market a little bit longer than it was. We did get a little spoiled these last 2 years. But like I said, I have been seeing the market slow down a little bit. I've seen properties stay on the market for about a week. 2 weeks.
So
Ours
so
was, ours was
go
2
ahead, David.
weeks. We just had one. Debbie just got it under contract. 2 weeks, right? 2 weeks, 2.5 weeks.
Yeah, almost 2 weeks.
Got it. Got it. But so then you're saying, Debbie, that if that does happen, then prices will stabilize. But you're saying, David, they're not going to stabilize that much. They might come down 20, 30,000, but nothing like we used to see before.
Yeah, they're not going to go back. Well, I mean, honestly, they've only gone up in our market like 15, 20%. I mean, that would be high. I'd say like 10% is probably a good one. But on average, the appreciation of a home is about 3% annually anyways.
Right.
So
And
yeah.
every year we appreciate about 10%.
So it's just I can't see that there's going to be a market crisis where we're going to have so much inventory. I think that there may be a gap between, this is where I think will happen. There will be a inventory surplus in a specific price point, and that'll probably be between 100 to 200,000. No. 200 and 250, 150 to 250, probably better there.
Probably closer to 200.
Okay, yeah, probably better there. Yeah, let's say 200 grand. That's probably it.
Between 200 and 300,000.
Yeah, that's probably better to say. Yeah,
I would guess to say, because then that at this point, if interest rates go up and inflation is at an all-time high, then any home between 2 and 300,000, like, it's gonna be very difficult for you to afford that at that point.
Yeah, it's just gonna be, there's just gonna be a lot more sellers than there will be buyers at that market. But the 100,000s, you're right, 100 to 200, that there's always gonna be a market for that.
Right.
And anything over 300, there's always gonna be a market for that, because there's always buyers.
Our market prior to this was between 260 and 300. You'd see it stay on the market a little bit longer because we didn't have as many buyers. But anything underneath that, it was still moving fairly. I mean, at that time, it was moving pretty well.
Yeah. What about those extravagant homes here in the Rio Grande Valley where $400,000 to $500,000 mark, which they are out there? What about those? I mean,
right now they've been selling. We actually got our first $2.3 million home that sold in Harlingen just a month ago.
Really?
Was that Treasure Hills?
I've never seen it. Nope. It was out of house. I've never seen it in Harlingen. I've seen it in Mission, Sherryland. You do have your $1 million homes, but in Harlingen, that was the most. The last 5 years, I had been watching that price point, and Rancho Viejo had one that sold for about $750, and just in this last 2 years, we've had some higher price homes selling. But like I said, this was the largest one in Harlingen since I've been in real estate that I've seen actually close. Who bought it? I have no idea.
Well, there are a lot of buyers right now with a lot of money. There's a lot of money. I mean, I have some family members that just sold some farmland for, I think they got 36,000 an acre.
For farmland?
Whoa.
They must be needing to do it as a subdivision or something, but that's pretty high.
It's in the back of the golf course.
I know exactly. Yeah, they're doing it as yeah.
But it's speculative. It's all speculative. They don't even have it zoned residential. There's no running water. There's nothing there. It's all speculative. Right. I mean, but they're paying $1 million for it.
Right.
How many acres?
Like 30 something, I think, or something like that. So it's
I think 36, or I don't know. I don't remember off the top of my head. I know exactly which one you're talking about, though.
But no, this was off market. They're buying it from a family member of mine. It's off market. It's off market.
At once, okay.
And they're buying cash.
Whoa, interesting.
So there's a lot of money out there, man. I mean, I know where they're getting it. I mean, the stimulus payments and all economic growth that has occurred in the last 12, 18 months is really.
I want $1 million stimulus payment.
Huh?
I want $1 million stimulus payment.
Man. Well, you had to own stock in HEB, Walmart, Amazon, and everything else that just blew to the moon.
So you think my stock in Zillow wasn't going to help?
No.
That's not gonna help you for the next 15 years, Debbie.
Well, I mean, it's a good time to buy the dip. Buy the dip.
The dip that keeps on dipping.
Are gone.
Yeah. Well,
The what? What was that?
Your Zestimates are gone.
Oh, the Zestimates.
Everybody come back and he's like, "Well, I saw on Zillow that my Zestimate is this."
You know, Zillow has created a good platform, but obviously it is flawed in some ways. It's not always 100% accurate, and they rely heavily on consumer disclosed data.
Right.
They don't necessarily get a lot of information from MLS or anything. A lot of it comes from this consumer saying, "I bought this house and this is how much I paid."
Right, because we cannot disclose it unless we get permission from the consumer.
Yeah. So that's how Zillow works. Like if you buy a house or you refinance, they'll send you like a email saying, "Hey, we saw you bought a house. Like, tell us about it." And then they want you to tell them how much you paid and, you know, when did you close and all that. And then that's why when you go to Zillow, you see all those things where it says transaction dates and history and transfers and all that stuff. That's all self-disclosed. It's all self-disclosed.
So they don't fact check that?
Well, I mean, there's probably a big ass disclaimer on the bottom that says all the stuff we got was given to us by somebody else, and don't blame us.
Print on the bottom, because I've never seen it, but yeah, it's not always as accurate as people think it is.
Yeah, there's definitely some things to think about. All I know though is if you think about the way that this has all transpired over the years, guys, the market isn't going to go anywhere different in the next 12 months. It's going to be about the same. It's not going to change so much. I mean, maybe houses will sit on the market a little bit longer, but that doesn't mean they won't sell.
Right.
We're not going to have a lot of inventory. Obviously, if you're looking at like South Padre, I've been looking at them for a condo or for a house there for the last like 8-9 months, and that market is starting to take a dip, but it should always take a dip in the fall, in this winter. Right. So,
but it's still going pretty crazy, yeah. And it's like a lot of cash buyers there too.
Yeah. I had a family member just buy a condo out there, and they got bid out on like 6 before it, and cash buyers.
Yep. For
$500,000.
Yep. I've had several clients, and we just finally said, never mind, we'll just wait.
Right now is a good time. I've been seeing some great deals. I want beachfront, so I don't want to buy a condo just to have an apartment on the street near the beach.
I would imagine there's quite a bit of those, but the beachfront real estate is difficult to get.
Yeah, I mean, that's what it is, man. So if I'm going to add something, guys, because I think I could add value here. As an investor in real estate today, I don't think that there are many people thinking about investment because they think that the market is just too expensive or it's too hot to do stuff. And so there's a lot of people out there that tell me like, well, I want to do it, but it seems like everything is just selling and it's too hot. And then when they do, honestly, they say, I want to make a move. I look at what they're doing and they're buying stuff that's literally at retail price. And you can't make money on retail prices if you're an investor. I mean, the whole point of just like if you buy a stock, you want to buy a stock low so you could sell it high. Well, if you're buying it at the highest point, you're never going to make money. And so one of the things that you can do, if I were recommending to the audience, would be to contact somebody like Debbie, because Debbie runs into deals that don't go on the market because they can't be sold. Honestly, there's probably a handful of deals every year, or probably more, that just can't be sold because they don't meet FHA requirements. There's an estate involved. There's family members. There's divorce. There's all these reasons why people won't list them. But if you know Debbie, she can give you the lead. Maybe you could go make a deal with them, right? Because they like deals like that.
I mean, because at the end of the day, it's all about making the right, decision choices for these consumers, because you want them, you want them, if they need help, you want to be able to help them. Whether you make a buck now, it doesn't matter, because it all comes back at the end of the day. One thing I wanted to add about what David said is I have seen a lot of people. There's several apartment complexes that had come on the market, duplexes, fourplexes, and it just baffled me that these buyers were paying so much above list price. I mean, we bid on one. What, David? Did we go 5 above?
No, we did. They were asking to
49,
something like that. We offered like 10 above.
Yeah, okay. We offered 10 above and we still didn't get it. Well, when you look at it and you do the numbers, those rents, you can only raise those rents so much. So you were not going to be able to get that money back. I mean, I couldn't understand how these investors were going to be able to make any money off of it.
The,
So that's just one thing. And then when you're buying high, my biggest worry is that what if you bought 5, 10,000 above the market, and then you come to me in 5 years, hey Deb, can you sell my house? Well, I don't know what the market's going to be doing in 5 years, and whether I'm going to be able to get you out. So what that means is you may have to come in with money just to be able to sell your house in 5 years.
I've seen that. People actually have to, well, and I actually introduced you to a buyer recently. I mean, a seller, right? That was pretty close to having to come out of pocket. He's pretty
Right.
close. Real
Right.
close.
But he actually, I think if it's the one I'm thinking of, we ended up selling his 15, 12 above. 12 above.
Oh,
Wow,
see
and
what
that's
that
insane.
covered? What that covered the closing costs, maybe?
Well,
He was able to walk away with some money. He was happy.
Okay.
wow. Well, so just to be clear, because I'm in the investor space, whenever I run into a deal that I can't buy, for an example, that I can't buy because the seller just wants too much, it doesn't make a financial sense for me, or the deal is just not good for us, I pass them to Deb, and I'm like, hey Debbie, you should take this guy, you should call this person, because they need a real professional to do this for them. They're not willing to make a deal with me, because I think most investors who are serious about this, not just dabbling in this, they have to have hard numbers, and they don't mess around with those numbers. Like, it's not an emotional buy. And that's what Debbie was saying about those people paying so much over for a fourplex. They were doing it by emotions. They were like, we have a little money, we should do this because everybody says you should own a fourplex. Let's just buy it. They don't come up very often, whatever. They make all these excuses. And the only reason that I offered over asking price, and that's not what I was offering, was exactly what needed to be offered. And the reason it was is because it was coming out to about 75,000 per unit. I was going to rent them for about 800 each if I could raise the rent rates. So I'm at the 1% rule, which I use is every unit must make 1% return on what it costs me. So I was getting $800. It was perfect. And then what'd they go, like 190? I mean, 290 or something stupid.
Something like that. And I was just like, I don't understand. I don't understand that logic at all.
Yeah.
So either they're just not very knowledgeable, or could it also be that they have a lot of money, and if they use their real estate investing as a business, then they could factor in the losses on their taxes?
Nah.
Is that
That's
something?
not.
No.
No, they're not that smart. I mean, this is baby investing, bro. This is
Yeah.
baby
Okay.
stuff.
Not unless
So they won't get that complex at that level then.
No, they won't. If you're looking for a $290,000 deal, you're not thinking about depreciable assets that could be expensed or amortized over the years and shit. You're not thinking like that. You would be going after a $3 to $5 to $10 to $30 million deal.
Got it. That makes perfect sense.
So these guys are just honestly, they're just uneducated in the world of investing, and they had a little extra cash, and they just said, "Hey, let's go for it." And that was a lot of people this last 12 months, and they're still doing it.
there was quite a bit like that, and yeah,
they're still doing it, and we're very fortunate that we picked up a few things. I'm very selective because the market is too hot. It's really hard to find deals, but you got to be looking for a deal, and I honestly don't believe, and this is not to say anything negative about a real estate profession, but my belief is I really can't. Rarely, if Debbie sent me 100 deals, less than 10 would be something I considered, because they're just overpriced.
Yes, maybe 5 years ago we could have found a deal, but right now, no.
So let me ask you this question, David, because, like, for example, with stocks and cryptocurrencies, which is a space that I spend a lot of time in, sometimes you'll overpay for a stock, sometimes you'll overpay for a cryptocurrency, and then it goes down. But if you abide by the principle of just holding until it's profitable, then you're going to be fine. So when you look at real estate, let's say, for example, you're not very savvy in being able to find those deals where they are below market value. in essence, if you buy a property and let's say you buy it at retail, as long as you're able to rent it for what the mortgage costs you, or maybe a little bit above, then wouldn't it abide to the same principles that if you just hold it for the next 15 years, it's still going to be profitable for you, or not necessarily?
I would say yes, but the problem with that is that there are a stock or a bond or an equity in that nature would not. It doesn't cost you any money to hold it. I mean, it's just opportunity that you're missing using the cash, right? You're putting it there to park. In real estate, if they make a bad deal, now a bad deal literally means where you're actually negative or break even. That's a bad deal on a monthly, and even at that, there still has to be, I mean, some real cushion because
Yeah.
one roof leak, one AC, one pipe breaks, and boom, like all your profits from the year. And so now you're actually coming out with money to come to the deal on an annual basis. So yeah, if you get okay and you just kind of get lucky if you're doing this on your first time and you just kind of break even or come a little over break even, okay, you're cool. But imagine if you have let's say you have a house that you buy single family and you lease it out and then 6 months out they leave and you go 3 months vacant. You've got now 3 months of now money that has to come out of somewhere.
Right. It's good. It's like us with our property management division. We have a property manager, and I sign all those checks that are going to the owners, where we have an itemized list where it's showing AC needed to be, fixed, and we had a water heater that we needed to replace, and sometimes, the owner doesn't get even a check because we've had to make all these expenses. And so what happens is, like David said, if you have a mortgage, that payment has to come from somewhere.
Yeah.
And so if you're just breaking even, that's not even worth it, because you always have to have a cushion for those things, for things that are going to be breaking, the normal things. And of course, if you're with a property manager, a property management division, then, they're going to be taking their percentage, say 10%. So it costs to have investment properties.
Yeah, it's an overhead. But I would say, and just to talk to anybody who's in the investment space who actually is investing cash, well, I don't believe investing in much cash is probably the way either. So that's why we're talking about mortgage payments. But if you do have a bunch of cashed out properties, it's not going to hurt as bad. But if you got a mortgage or somebody who you owe money to, it's not going to be a fun downtime when you can't make that payment. It's going to hurt you. It's not going to be your best interest.
Got it. You see, there's a lot of complexities here, so that's why I just I like my stocks and my crypto. I don't have to do shit. I just put money in there. My life insurance policy, I don't have to worry about it being. I don't have to worry about any of that stuff. But it's definitely something that I want to get into eventually. So
well, everybody should invest in real estate, in my opinion. Not necessarily just because I'm advocating for real estate, but I think it's a hard asset that is appreciable. It feels good. It's something you can be proud of.
It's an inflation hedge too.
Correct. It hedges against inflation. It feels better to go drive by a property that you own than to open up the Coinbase app.
It's true. That is very, so. Okay, so you said 1%. 1% is what you want. Are you saying 1% of the total value of the property is what you're wanting to earn per year?
No. Per month, and I want that for what I put into the property, not necessarily what it's worth. What I put in. So if I put 80,000 into a property, I'm trying to get 800 a month. So I'm going to get 12. So I'm trying to go for a 12% return annually, but it's not going to be a true 12 because I got to subtract taxes, insurance, anything that may have happened. So I'm shooting between an 8 and a 10% gain on every year on that real estate.
After you factor in expenses, which means that if you're charging $800 worth of rent, right, then the mortgage needs to be where?
Typically under 600, maybe even 530, 540 is typically where we're at on that number. Honestly, that's with insurance and taxes, probably closer to 6, but it's with insurance, taxes, everything's included in that payment.
Got it. That makes sense. Okay.
Yeah. You're just
so what do you do? What do you do with that money then? So the little bit of margin that you're making every single month, are you putting that into an account to have it ready in case shit hits the fan and you have to fix something? Are you taking that and putting it into another property? How do you make sure that you have enough liquidity in case something happens, you have to fix something?
So we use a 20% rule. So every time we make money on a deal on a monthly basis, whatever the net profit is, we take 20% of that and we put it right back into a savings account. The remaining balance goes to deploy to find another piece of property.
Okay.
I don't want to. I mean, I have other income, so it's okay if something happens, I'll supply it. I'm not talking. I'm just talking about me personally. So if I didn't have that luxury, I'd probably go 50-50. Maybe even 60-40, you know what I mean? I'd have a different ratio, but I feel 20% is typically, because when I do a renovation to a project, like if I'm going to rent something, I spend a lot of upfront money to make sure that thing is going to be nice and I'm not going to have issues. Like I want to replace plumbing, I want to do electrical, I want to do the roof, I want to help, and I want to make. I kind of told myself I don't want to be a slumlord, right? Like I don't want to rent a bunch of crappy houses or apartments. Like I want the tenant to feel proud of where they live, and I also want to take pride in fixing up everything I can.
But your perception of real estate investing, David, is not for the cash flow that it's going to give you today. It's to build your net worth for tomorrow. Correct?
Well, yeah, but I think that's how everybody should think about it.
Right.
Well, yeah, but yes, this is true. But I guarantee you that that's not the way people look at it. The people look at getting into real estate for investing purposes. Oh, I want to make this money right now, and then whatever profit they make on a monthly basis, they go and they spend that shit. And that's not the way it's supposed to work. And I mean, that's the case for any investment whatsoever. I mean, you're investing into something for what it's going to do for you 10, 15, 20, 30 years from now, not to create cash flow today, right, Debbie? So basically what I'm saying, guys, is you still need a job. You still have to have a job. You still have to have something that's making you money on a monthly basis. That's the real estate is not going to do that for you initially.
Oh man, and I'm sure Debbie hears this more than me, but I hear people come to me all the time that are just like, man, if I could just have some rental properties, life would be great. I'm like, I mean,
Yeah.
I make really good income with all the rentals. I do, but I also have expenses and liabilities tied to them. So I'm not getting rich here. Like I have enough income to cover all my expenses. Great. But that's not enough.
No. They have to remember you still have to have, you're still going to be paying, even if you don't have a mortgage on that rental property, you still have to pay taxes. You still have to pay insurance on it. And, again, the maintenance. So, I mean, it does cost you to have these properties.
That's why, Deb, a lot of people who inherit properties sell them real quick. And that's why we get those deals and you get those listings, because there's so many people who inherit a property, even though it may be free and clear, they have debt, which is insurance and taxes right away. And they're like, look, I don't want to deal with this. Like, that's just not me. And so they dispose of properties. And if you can get in front of those people before they decide to go to the market, you save a ton of money. You save a ton.
Well, and this is true, because so one of my clients, very, very good friend of mine, his mother passed away, and so he inherited the property, and right off the bat he starts getting all of these offers, cash offers. I don't know how these guys find out so quickly that I guess the person passed away, and I don't even know how they found out that he was the one that got the property. But they're sending him like letters, like on a daily basis, and calling them or whatnot. And he was going to take one of those cash offers, but he called me because I handle his finances, and he was like, hey man, what do you think of this? I was like, don't, because he's a good friend of mine, said, don't take a cash offer from anybody. Said, you can make a lot more money if you talk to a real estate agent and you put that house on the market. You'll at least make 20 or 30 grand more than whatever the cash offer is going to be. So don't take any cash offers. But I think in those scenarios where people just don't know what to do and they just don't want to deal with the problem, they'll let it go. And those are the opportunities where if he wasn't somebody that was that close to me, I would have even tried to buy the property from him. But because he was a close friend, I said, no, you can get more money. This is what you need to do. But I can understand how that can happen very, very often.
No, I've had another one that I've actually have on the market, and it was the same scenario. Mom passed away, and he doesn't live in town, so he says, I don't even want to mess with having it rented and dealing with all that issue. He says, Deb, I just want to go ahead and sell it. I said, okay. So it's on the market. But yeah, I'll come across some of those. If the numbers do not make sense based on what, they have to pay off or whether there's a mortgage there, then I will always tell them, you have two options. You can either go to, that's when I call David up and say, hey, David, this is a situation. If you guys can work it out and get it done, then here you go, like get it done. Because, you know, if he puts it on the market, let's be real. He's going to be paying a realtor's commission. When they pay a realtor's commission, we'll settle on, we'll say, a certain percentage, and that percentage gets split between myself and whoever else sells it, whatever the other realtor sells it. But it's still, that's money that would have been in his pocket. And when they're very close in their payoffs, I'd rather find them someone that they can do a direct deal so that they can at least take home a little bit of money,
Sure.
after the sale of that. And we've done a couple of those, right, David?
Yeah, and we just did one, right? But it was really because we were helping some people. I mean, honestly, it makes sense when we can help them, because there are a lot of people out there, like as an investor, if you meet a family, if it's like buying from a wholesaler and anybody else, whatever, is different. But you meet a family who needs some help. I mean, there's an opportunity for us. As long as the numbers make sense, it doesn't matter. You just want to help people. They got to make sense for them. I actually believe in the negotiation process for real estate. When it's dealing with me direct to the seller, I want to make sure both win. Like, I can't screw them. I'm not trying to lowball them. I always tell them this is as high as I can go. If you can't do that, we're probably not going to make a deal anyways. We should just go on.
And then you abide by your principles, which is this is how much return I need to make, basing it on my calculations, which means that really this is as high as I can offer you. And if you can't do that, then we can't make it.
It doesn't make financial sense. And then I'll say, hey, Debbie, call him. Because I can't help them. I just can't.
I do the same thing. I will run numbers for them first and say, here are all your closing costs. If you put it on the market, this is how much it's going to be. This is how much it's going to cost you to sell it. If you're comfortable with that, then let's put it on the market. If you're not, then let's find a different solution for you.
Sure. So I'll wrap it up with a question for each of you, and I'll start with you, Debbie. Okay. For people that want to get into real estate, because right now I'm actually working with some teachers, some educators that are wanting to get into real estate. Is this a good time to get into real estate? Are they going to get into real estate and just get completely slapped across the face? What's your recommendation right now?
So getting into real estate at any time is a great time to get into real estate, and the reason I say that is because everyone's going to need a home at one time or another, or everyone wants a home. So regardless, whether it's now, tomorrow, the next day, real estate can still be a great second income for them. Just like we discussed on our other podcast, which was the one on about
how to get into
getting a license. Even if they just hold their license and they refer people into the real estate company and let them do all the legwork, they're still going to get a paycheck from that. So they can still have that second stream of income.
Yeah, people and everybody's always going to need a home. So I mean, real estate isn't going anywhere. Yeah, that makes a lot of sense. So David, for you, the same question, but I'll add one additional question to you. For people that want to get into real estate investing, like is right now a good time? And then the other question that I'll ask you is, what should be the first thing that they do if they do want to get into real estate investing?
Number one, it's always a good time to be in real estate. Like Debbie said, I mean, there's never going to be a wrong time to get into real estate. I mean, people would argue 2008 was, but I would tell you that, I had funny, and I don't want to get off track here, but somebody told me a story recently, and it was somebody who was trying to invest in real estate, and they were being told not to do it by a very close family member. They were like, you should never invest in real estate. It's really dumb. It's scary. And it was because that family member lost and filed for bankruptcy in 2008. And they said, getting a house is such a liability. It could really put you in debt. It's going to hurt you and all these things. And honestly, the reason that they were in that position is because they just didn't have the right financials. I mean, they did make a mistake by buying a house they couldn't afford, but they didn't know any better. Okay. So they have to take some fault in that though, right? They can't just say the bank screwed me, the government they did not screw you. You screwed yourself. Right. So
sure.
if people say that there's always a wrong time, I don't think there's a wrong time. I think there's always the right time is right now. Now, the challenge being is the second part question, which you asked me, which is you have to be in a financial place to be able to do it. Like the first thing is to assess your finances. I mean, are you in a financial state in your own economy, as I would call it? Can you afford to make an investment in something? And typically that means you have cash, because you're going to need cash to do it. I mean, there are some ways you can go zero down. That's very complex, takes a lot of time. If you're trying to do this as passive activities, you're going to need some cash, because if you don't have cash, then you have to have a lot of time. If you don't have time, then you better have some cash. It's just the way the world works. So if they have some cash, and that kind of cash is either they're going to put it in the stock market or they're going to invest somewhere else. Well, as long as they can say, this is an investment that I'm not needing right now, and I don't need it anytime soon, then this is a good time to get into real estate. Because if it's your whole life savings that you're thinking about going into real estate with, I would probably tell you not to use your whole life savings. I would probably tell you either, unless you have a lot more money coming in the near future because you're producing it some other way, but I would say you need to have a financial stronghold. So you have to have some cash, typically 10 to 20% of whatever you want to buy. So if you have $10,000, you could buy a $100,000 property, which you're not going to find. You probably need about 20,000.
At least
20 to 30,000 is probably the minimum you need today to really get into real estate and be secure.
Right.
There are other ways you can get into this. I can talk about it in our course, Path to Freedom. I talk about using the wholesaling method, securing contracts, doing that stuff. That you can do, but you have to have a lot of time to do that. So 20 to 30,000, I'm not going to call it disposable income. I'll just call it investable income that you can use and not need back. That's when you can start. And then the second thing is, I mean, really, I would educate yourself. Don't just go pick a house because it looks pretty. Like, literally look around the market, just drive around, see what you like, but also see what's for sale, see what areas are hot, see what, like there, you have to study something. You don't just, in my opinion, I think too many people do this emotionally. It's like the cryptocurrencies today. Everybody gets hot on one and they all just want to go throw all their money into something because everybody says it's going to be great. And then it goes to shit, So don't do that. Like, be a student in this business, because it's not hard. It's definitely not that hard, but it's definitely not easy. I'm not that smart, honestly. I don't think I am. I just know that I have some principles that I live by, and as long as I make those little rules, and I share those in our course, those rules, as long as you follow the rules, you can't get burned. You can't get burned. You'll be fine. But if you don't follow the rules, you probably are going to get burned. So I think number one, invest now. Number two, make sure you're in the right financial situation to do it.
Very good, man. Well, I appreciate that. That's very, very good. And we do have all of this stuff that we cover in our course, which is Path to Freedom course, startyourpathtofreedom.com. Any final remarks for each of you before we wrap it up? Because I know both of you guys are.
Basically, I mean, if you're looking to buy a house, even if you're buying it from your relative or somebody else, and you're trying to determine price, or you need help filling out a contract, call me. I'm free to help you out with whatever you need. It's not, I like to share my knowledge, basically. So if you have any questions, feel free to give me a call.
I would say call Debbie. This isn't a plug, honestly. I was gonna, and just to be clear for you investors out there who think you're really badass, I know I can sell my own real estate, but I have realized to come to real estate in my mind today, you should use a professional to do it, because I didn't want to have to do all the work, go through all the headaches. I listed a property with Debbie just this week, or less than 14 days ago. She's already got it under contract at very good price, which I was very happy with. It's amazing. Like, we're going to make a ton of money on this deal. She helped us find the deal. She's helping us sell the deal. I mean, it's just a win-win for everybody. Don't think of realtors as your enemy, and don't think that they're the only source either. You have to educate yourself in that way. And Zillow is not the way. By the way.
No, Zillow is definitely not the way. But I mean, I'm sure there's a lot of realtors out there that they'd be happy to answer your questions. If you have any questions, or you're wondering about investing or whatever, just like David said, if I have someone that says, look, I have all this money and I want to invest, I always tell them, well, go talk to David or go listen to David's podcast because he can help you out. He's been doing this, so he can get you started.
So Raul just messaged me, said his internet went out. So it's just me and you. Finally. So
Wait,
I actually want to ask you real quick.
are we still live?
Yeah, we're still live. We're still live. Let me ask you one question.
So we can't say anything wrong.
Yeah, let me ask you a question real quick because this will help everybody understand this. So a lot of people today are looking and thinking about real estate and they wonder, like, I mean, is there a reason why they would want to let's say go to a mortgage company before they go to you? Is there a reason why people, because I always hear this from people, they're like, well, I always want to go look at real estate, and they always ask me, they can't see it unless I have a pre-qual letter. Why do you guys want a pre-qual letter before you show a piece of real estate, just to clear the air for everybody?
Okay, well, there's several reasons. One, the seller goes through a lot of work to prepare their homes for you to be able to go take a look at them. And two, it's if I show you a $200,000 home and you fall madly in love with it, we write an offer on it, and then you go to the mortgage company and they say, I'm sorry, because of your debt to income ratios, you can only qualify for 160. Well, how devastated do you think you're going to be? And, and on top of that, there's also the other part of it, which is when you're going to make an offer, you're looking at property, you really want to make sure you understand how much it's going to take for you to get into a property. You know, what's it going to cost you, closing costs, down payment, what's your monthly payment, including taxes and insurance, because you want to make that comfortable decision. You want to be comfortable with what you're about to do, because it's a huge investment you're getting into. And if you're at the top of the market for your price range, for your income, and you really need to think about whether you want to do that. You know, I've seen a lot of buyers that will go at the very top of their income and they say, oh, we just won't do this, or we just won't do that, or we won't go eat, go out to
we're not going to eat out anymore.
Exactly. I mean, they will say that, but it's very hard to change your habits, to change your life for a house. So don't become house poor, is what I call it.
Yeah. Well, they're house rich but cash poor. Right? It's the appearance of wealth.
Well, I call it house poor because now they've become poor because all their money is going into that house.
That's right. I feel like that's happening to me right now.
It's that pull. No, but on the flip side, I must say you are adding value to that house based on that price. You are adding value to that house, and it's on the Resaca, and we'll talk about selling it next year. But
no. I got 3 more years in this house, and less than 3 years. But in the next, I'm not going to sell it. I'm going to Airbnb this thing for $200.
We both know if the price is right.
No, I'm going to get $200 and something a night here. I'm going to get $200 a night, and I'm going to rent this thing for $5,000 a month.
So next year, everyone, when we talk about this, and I say, oh, by the way, guess what house I'm selling? Just kidding.
Airbnb, I'm telling you, I'm gonna make $5,000 a month Airbnb in this house. $5,000, I guarantee it. $5,000.
$5,000 a month?
Yeah, Airbnb.
$250 a night.
Yeah, I mean, it could happen. It definitely could happen. There's some ballers that come to the RGB.
No, it ain't ballers. I'm gonna rent it to a bunch of nurses, bro. They're gonna all pay me top dollar because they travel.
The travel nurses.
Yeah,
so
that makes sense.
Let me tell you about how some of my little SpaceXers think. They've been buying homes, but they're renting the bedrooms to other SpaceXers.
Yeah, that's called house hacking.
Yes, I didn't know that there was a term for it, but yes, that's what they do.
And they make 3 times what they'd make if they rented it by just the house itself. So I think I really can get at least 200 right now. I can only imagine what I'll get in a few years, but I know I'll get more because there's always going to be professionals looking. I already told Karen, my wife, I told her, look, we're going to move. We're going to build a new house. And you know what? We're going to leave all the furniture here. And it's going to be an Airbnb.
Oh, my God. I mean, All right. I
That's
mean,
smart.
you could buy cheaper furniture to put in there, just nice, cheaper furniture, because it
No,
is gonna be.
he's moving all that out to the new house. I know
Yeah.
this. He's not gonna leave that there.
Dude,
He
just
will put
Well, I mean,
he
nah,
will
because
put cheaper furniture.
it
you
will
know,
have fully been depreciated by then, guys. It'll
you know,
all be
it's
depreciated.
gonna go higher on the next house for
Oh
furniture.
yeah. Oh yeah. Yeah, 10x baby. 10x.
Yeah.
10x. All right. Raul, man, sorry we lost you, but we're back, man. I
Yeah,
thank you for putting this together.
no worries. Sorry, I lost my internet connection, but I'm glad you guys were able to keep it going. So, guys, thank you so much for your time. We got to do this again soon. You guys have a great evening, and everybody, thank you for watching.
Bye, Deb. Bye, Raul. Bye,
Bye.
guys.
Bye.
Bye, Raul.